an interesting data point in the markets yesterday. So everyone knows that the SPX closed at all-time highs, but for all-time highs in the SPX, the VIX index, or volatility fear gauge, closed at an all-time high relative to SPX highs. So of all the days that the SPX made an all-time high, yesterday was the day that the VIX was the highest ever. So what does that mean? People are particularly concerned right now with this tenuous market high that we've made. So what is an investor to do about it? Well, you might want to use the 50-50 to check out some out-of-the-money hedges. So I'm going to share my screen and show you exactly how you can do that. In the past, we've talked about even money trades, but the 50-50 is also great for going for further out-of-the-money trades. If I'm looking at SPY, a nice broad market index, tracks the S&P 500, has highly liquid options, which we really like to trade. I can pick any variety of end dates. SPY has a lot of different expirations that make it really easy to trade. So I'm going to look further out for my hedge here because I'm going for a big move. So why don't I look towards the end of October? For the end of October, October 23rd to be precise, I'm going to drop my expected value. So dropping my expected value means a lower percent chance, but it means a higher reward if that happens. So kind of convex exposure to this large expected move. If I drop my EV down to 20, let's see where that's pricing the S&P for the end of October. Do I think it's going to be under 335 or do I think it's going to be over 380? Well, under 335 would make a logical hedge, but certain people might want to bet on that convex upside also. So under 335 is pricing in almost exactly that 20% EV that I expected or expected value. That's going to give me a 5-to-1 payout. So my max total cost is just a little over $100, 104 because we allow for a little bit of slippage and trade execution here, but my max total gain is $500 here. That increment's decided based on the strike. Closer to the money, you're going to see tighter increments, which will allow for smaller trade sizes. But going out to October, under 335, I can pay $100 now for a potential gain of $500. That makes a really interesting hedge to your portfolio if you think the S&P has some potential downside over the course of the next 6 or 7 weeks. Check us out at Harvested Financial. There's a lot more to come.